Welcome to the Captain's Blog. I'm David McDonough, Senior Vice President at Trilogy Financial. On this blog, we try to take what's unnecessarily complicated back here in Wall Street, make it understandable to you on Main Street. March, the worst month in a year, down 5%. A number of you out there are talking about the money that you lost. Maybe we should go to cash. Maybe we should buy some gold. Maybe I'll stop investing on a monthly basis. Scott on the Cape. I prefer to that, and I refer to that as the Main Street theory. But did the Main Street theory hold true? Doing the opposite of Main Street actually benefit you in April? Here's your week, your month in review. Yes, the Main Street theory held true. The market up almost 10% this month, the best month in 6 years. What happened? Did somebody ring a bell and tell you it was time to get in? Maybe the war stopped. Maybe oil came down. Maybe interest rates came down. Maybe the headlines stopped, the negative headlines. None of the above. Avid viewers of this blog know that we don't invest on headlines. We invest on fundamentals. And fundamentals are extremely strong. And again, you don't see it in the headlines, but where you do see it is the corporate balance sheets. Earnings this month, corporate earnings, much better than expectations. And you as the consumer are much better than what these headlines are showing. Just look at the bank earnings. The bank earnings continue to show that their balance sheets are strong, and that yours are as well. Again, market timing, folks, makes you look foolish, and nobody wants to look ridiculous.
And a man in my position can't afford to be made to look ridiculous.
So stop trying to market time, don't buy or sell on slogans, and consult your local financial advisor for more details. Now here's what to look for next week. Be prepared for the sell in May and go away crowd. They're going to be correct in certain sectors. Matt from Weymouth mentioned this week, Dave, this looks like the dot-com era. And there are certainly sectors, one of them being the semiconductor sector. I mean, it was up 18 days in a row, up 35% just in the month. Again, be prepared for profit taking. And then we have Len down the Cape talking about, Dave, you just sold a position or a portion of a position. It was up 50% in 6 weeks. Why would you do that now? It is time to rebalance. Len, that position went from 5 to 8% in your portfolio. There's nothing wrong with taking profits and spreading out that risk. Now here's your personal finance tip of the week. Active versus passive management. I just mentioned that the market, again, is at an all-time high. Take this weekend to look over your next 6 to 12 month in cash needs and get it out of the stock market. Also, positions, Len, that have gone from 5 to 8% in your portfolio, there's nothing wrong with taking some of those profits and spreading out your risk. Again, consult your local financial advisor for more details. So thank you all for checking in. We'll see you next week on the Captain's Blog. Welcome to the Captain's Blog. I'm David McDonough, Senior Vice President. Ha, 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 ha. Woo!